Thinking of investing in stocks? In this video, I give you 6 easy steps to follow if you want to start investing in the stock market. All information here is inspired by personal experience and popular expert opinion, so this guide will definitely enable you to invest your money in stocks in the right way. Hello and welcome to Financepedia, where we talk about finance matters that you did not learn in school. Today's video is basically the best guide for getting started in the stock market. If you're ready to invest but aren't sure about the first steps, you'll definitely love it. So remember to like, share, and comment. And as you settle in for the video, please turn on your notifications so you're the first to know when I publish a new episode. Also, feel free to subscribe to my channel. With that said, let's get this started. You'd be surprised to learn that a $10,000 investment in the S&P 500 index 5 decades ago would be worth about $1.2 million today. This just proves that investing in stocks properly and doing it over several years can be one of the best ways of creating long-term wealth. So, if you want to start investing, here are 6 steps to follow. Step number 1. Decide how you want to invest in the stock market. You can invest in stocks in several ways, so before you start, be sure to determine the type of investor you are. Decide whether you are good with the do-it-yourself approach or you'd rather work with a professional financial advisor who will advise you on managing your wealth. As a beginner investor, choose the do-it-yourself option if you have extensive knowledge of the stock market and if you're ready to spend many hours making investment decisions. After all, you'll be hand-picking your own stocks. If you opt to work with a professional advisor, also known as the do-it-for-me approach, you'll spend less time worrying about investing in the stock market. In this case, your finance expert handles everything for you, making it a great option if you have limited investment knowledge. Step number 2. Open your account. How you want to invest in the stock market will determine the type of account you need to open. What exactly does this mean? Well, if you choose the do-it-yourself option, which means that you manage your own money, you'll need to open an online brokerage account. Note, you cannot buy or sell directly on the stock market, so opening your account is mandatory. You can find the best online brokerages by doing some research. Some of the best brokers offer no-fee commissions on stocks in addition to educational content and other valuable resources at no extra fees. If you decide to work with a professional, you'll need to get either a human financial advisor or an AI advisor. A human financial advisor will help you create a stock portfolio and guide you in planning your wealth. Be prepared to spend about 1% of your assets in fees and be ready for a high investment minimum when choosing to work with a human financial advisor. All the same, choosing this route to ensure that you stick to your financial plan for as long as possible. I'll be doing a video on how to find the best financial advisor soon, so be sure to check it out when and how to find one. As for a robo-advisor, this is basically a brokerage that invests your money on your behalf in portfolio of index funds appropriate for your age, time horizon, risk tolerance, and investment goals. This option has gained popularity in recent years and allows you to choose your investments. Many robo-advisors will optimize your tax efficiency and make automatic adjustments over time. Step number 3. Determine what to invest in. Before we go any further, let's respond to this. What can you invest in the stock market? The key financial instruments traded on the stock market are equity shares, bonds, mutual funds, exchange-traded funds, and derivatives. That said, if you are working with a professional, whether human or robo, you do not have to choose what to invest in. After all, these solutions exist to ensure that you do not go through this kind of trouble. When you open these accounts, you'll respond to a series of questions that provide a great idea of the type of investor you are. Your robo or human advisor will create your portfolio and pick the securities to invest in based on your information. All you do is load the money into your account. On the other hand, if you are choosing a brokerage, you have to choose every investment commodity and make trading decisions. The good news is that many good online brokerages offer free research and countless resources to aid beginners in this regard. Step number 4. Decide how much you're willing to invest and buy. If you're trying to build wealth for the long term, you need to be prepared to put money into your investment accounts regularly. What that means is that you'll have to adjust your monthly budget to accommodate your investment needs. So, how much do you need to begin with? The good thing is that most online investment brokers today don't have a set minimum you can start investing with. That and the fact that you can buy a fraction of stock means that you can begin buying stocks with any amount you have. The important thing to remember here is determine how much to invest depending on your risk capacity and risk tolerance. Risk capacity defines the maximum amount of risk you can take depending on your financial situation, while risk tolerance is how much risk you're willing to bear. In the end, how much wealth you're able to build will depend on how much money you put in over time and how long you want to hold your investment. Start with that and you can comfortably commit to every month and maintain your investment for 3 to 5 years or even more. Past data has shown that markets do eventually rise, which means that your assets will have grown in a couple of years. Step number 5. Watch your investments. So, you found a brokerage platform, have bought your initial assets, and are making monthly contributions towards your account. What's next? Watching how your investments are doing is important, whether you're a passive or active investor. Passive investors, of course, have minimal responsibilities or interference in their investment accounts as they have account advisors to do all the heavy lifting. As a passive investor, you'll still want to check out your portfolio every few months to make sure that everything aligns with your goals. An active investor has to think about everything from the stocks to sell or buy to when to do it. You'll be managing your portfolio on your own and, as such, actively making short and long-term trading decisions. This option can be tiring and difficult even for seasoned investors as you have to keep up with the latest stock market news majority of the time. Step number 6. Keep your mind in the long game. Investing can be frightening, especially for a beginner. Daily or weekly market dips can quickly set you in panic mode. But here's some advice that has worked for many successful investors, including Warren Buffett himself. Focus on the long term when making your investment decisions. Buy equity in well-performing companies now as long as they're going for a reasonable amount, and keep it as long as the company keeps doing well. You can keep them for 5, 10, 15, or even more years. You'll definitely experience some bad days here and there as the market will always have fluctuations, but in the long run, you'll reap good returns on your investment. Well, that's all I had for you today. To recap, here's how to begin investing in stocks as a newbie. Number 1, decide how you want to invest in the stock market. Number 2, open your account. Number 3, determine what to invest in. Number 4, decide how much you're willing to invest and buy. Number 5, watch your investments. And finally, number 6, keep your mind in the long game. If you've enjoyed today's video, don't forget to like, share, and of course subscribe. I'd like to hear from you. What's your experience in the stock market? What are your fears as a newbie stock investor? Share your thoughts in the comments below. See you next time.